things I want to emphasize is you can tell in this weekly market analysis that I'm doing is really short and sweet. I'm really narrowing down the trading opportunities that I'm looking at, but I'm also giving you guys a lot of action items to do your top-down analysis. At this particular point, those of you that have watched all my videos and have been around the blog and so on, the website, a daily 4 hour and 1 hour top down analysis every trading session, you guys need to be doing that. And so I'm not really spending a lot of time when I do these recordings to do that for you, but I do mention check your daily chart and so on and so forth. And so I want to emphasize that you need to be doing that. You need to do your top down analysis. And as I scroll through these pairs, I have my 4 hour charts up right now, and a lot of you guys email me during your trading sessions, particularly in the London market, and you're not necessarily asking me for advice or anything. You're just making statements like looking at the Aussie Yen, or I see an ABCD pattern on the Kiwi Swissy, those types of things, and that's great. But one thing I'm often puzzled by is you guys will send me an email and go, this price action sucks and blah 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 blah, and then half an hour later you say, well, I got stopped out in a trade. And my question to you is, if you've got the ability to recognize that the market's moving sideways and that you don't have a stagnation filter, which I want to talk about in just a minute, but if you don't have the price action that is calling out to you and creating an opportunity, what are you doing trading? Go to bed. And that's what a stagnation filter is for. If the market, for me, on a 1 hour chart during London, if I don't get a valid trade signal the first 2 hours of London, or the market doesn't move 50 pips in one direction, I don't trade. That's my stagnation filter. There's not enough volatility for me to sit there and grind out 8 pips on a scalp. I'm looking for a minimum 30, primarily 50 pips every time I click the button. So you guys need to have a stagnation filter in place instead of trying to force your will on the market just because that's the only time you have available to trade, or you're sitting down in the London market and there's nothing compelling, and perhaps there's news in 2 hours and so on and so forth. I think it's absolutely foolish to sit down in the London market at the London Open with GDP news coming 2.5 hours later on the pound. Why not wake up 15 minutes after that news, or that wouldn't be smart, maybe a half an hour before that news, wait for the news to come out 15 minutes, and then look at your charts and place a trade. I will say on the positive side that many of you are really, really doing some fantastic analysis, and you're emailing me your charts to confirm what your analysis is showing you, and 9 out of 10 times you guys are dead on. I still think that you're afraid to pull the trigger, and that's okay, but at least you're building that confidence in your analysis. But you've got to, that's why trading a demo account is so important, is if your analysis is right 9 out of 10 times and you can execute without hesitation, then you'll just be knocking out of the park when you go live. So don't give up on this discipline and these principles that we beat to death every week, because they'll put money in the bank eventually when you're doing this on your own. The London Open for me is at 2 a.m. in the morning. I get up about 1:15, and I look at the market. I look at the market at the new trading day, which is, for me, is the Tokyo market, which is 7 p.m. at night. I look at my daily charts and my 4 hour charts. I look for advanced patterns. I look for prevailing trends on the daily charts. I do my daily ATR analysis. And then I narrow down the pairs that I want to look at for the course of that day. Then at the London Open, if anything has transpired, I don't trade the Asian session. Then when I sit down an hour before the London Open, I redo that analysis. I look and see what the ATR is on the daily chart. I'll then look at the 4-hour chart to see if during the course of the Asian session, if we've created a new structure or if a new advanced pattern has been developed. And then I'll begin hunting. I'll make notes on that, look at the ATR again, and then I'll start combing my 1-hour charts. My 1-hour charts intraday are my trading time frame. And I just do that every day. And then if there's not enough volatility in London, typically London will create the high or the low of the day. Typically. There's never anything that's 100%. But typically, and guys, I can't tell you, many times I'll say nothing's happening, and then some news, Draghi will have a couple of cocktails and just say something at a party, and the market will move. The market will move 100 pips in one direction, and I'll get up and go, well, I missed that, but I'm ready for New York, because all the people, if the market sells off in London and all the buyers in New York are trying to cover their shorts, the market's going to go up. I can take 30 or 40 pips out of that, no brainer. Usually the daily high or low is established during London. Usually. Robert says he looks at the market 2 to 3 hours before London and then 30 minutes before the London Open. Whatever's working for you. Do I close pending orders in the Asian session? Yes, I do. If I place, I'm using a lot more pending orders, guys, especially on the 4-hour charts. I trade more advanced patterns on the 4-hour charts. Okay. Daily charts intraday, I use much more price action, and you can see here on these charts I actually have the crossbow system on these charts. That's what you're seeing on my charts. And this was a nice little bounce right here on the GBP CAD. Here we have, this is actually London and New York, but here we have a very, very nice little setup. So we've got market moving down. This was the low of the previous day, new structure. Okay. Nothing really in here in terms of historical structure. We've got a lot of noise right here. And then let's pull our fibs in, sore thumb swing to swing. And we've got bullish divergence. And we've got a very, very steep cross of our TDI crossing not only our trade signal line, but our market baseline. And here would be our arrow signal during Asia, which I don't trade. Okay, there's our signal. And then let's look at our 1-hour chart. So here we have impulse, retrace, and right here, excuse me, is 2 hours into London. We don't have a bullish rotation, but we have this nice aggressive C trade right here back into this structure. I know some of you took this trade because you showed it to me. I trade the crossbow most of the time, but I also trade advanced patterns, and I also just trade price action. I don't need the crossbow on this chart, traders, to take this trade, because what do I have? If you watch the price action trading workshop videos, candle patterns. So what do I have? Impulse, shallow retrace. Let me get rid of this so we can see what's going on here. Oops. Sorry guys, there we go. Shallow retrace. Okay, right about 50%, but by definition, shallow retrace 50% or less means strong uptrend. And here we have, if we want to come in here and pull in fibs on our 4-hour chart, which we can do swing high to swing low, high probability of a nice bounce here. Again, 30 or 40 pips, guys. I'm not looking to retire off of one trade, but 30 or 40 pips. Remember the baseball analogy. I'm just trying to hit singles. I'm not swinging for the fence. That's how you put money in the bank. And if you want to take this for 30 and then look at structure, see this structure right here tells me, okay, I'm just going to take this trade and be done. The market continued to rally, but I'm out here. I'm already out. This is how we do our analysis. And if you look at the 4-hour chart and pull in your fibs and all this kind of stuff, this is how the market's telling you what to do. I haven't been trading the euro a lot. I've just grown less fond of it. And we have seen, even though we've had this massive sell-off, look at how oversold we are here. I mean, insanity. And then the last couple of weeks, we've rallied a little bit. We've retraced back into structure. We broke below and closed below, but we got held off, but we're still kind of overbought. But look at the potential here. Look at this weekly chart. Historical new lows. You guys all know that, but look at what's happening on the weekly chart. So let's just say today, without knowing anything, would you be a buyer or a seller? Would you be a buyer or a seller on the euro? Seller, okay. I know some of you want to look at this and go, aha, way oversold, buyer, blah, blah, blah. But look at our trend line. If you didn't know anything, you would still be participating with the prevailing trend by being a seller. So now, if I'm a seller only, if I can see that and I'm a seller only, I've just taken out of play all the doubt about being a buyer. So now I'm only looking for sell trades. So now I'm looking at my trading system going, where would I sell? Well, bullish rotation. This is late on a Friday. And I've got consolidation here. The market's going to get hung up. But high probability, perhaps, of retesting this previous support. And we didn't have an ABCD completion. We have no harmonics. Kind of a mess. I'm not trading that pair right now. I've disqualified it. Nothing's jumping out at me, but I've determined that if I'm trading the euro, based on what I see, I'm a seller only. That's how quick you can disqualify a pair. All right? Look at the pound dollar. This is a 4-hour chart. Look at our 1-hour chart. Unless you have a breakout strategy, if you're trading a directional model right now, what's the range here, traders? Let's see, 100 pips, 150 pips? Yeah, 150 pips. Some nice scalps here, but you better be sure you know what you're doing. Yeah, it's a bit messy. I'm staying away from that. Aussie dollar. Really nice setup here. Price moving up. Oscillator somewhat flat. Market baseline not where we like to see it. Let's look at our 1-hour chart. Here's the trade. Okay, here's the trade. London. And if you're using ATR, you've got a 40 pip stop here, and you're safe. 40 pips is way up here. This sideways price action keeps you in the trade, and eventually you reach target 1 and target 2. But this is what I'm telling you about patience. This takes 1.5 days on a 1-hour chart. And until you're stopped out, do you just get impatient and close the trade? Not if your analysis and your trading system tells you what to do. Who cares if you make a profit in an hour or a day? A profit's a profit. You have to have the patience and the ability to let this trade play out. And some of you see 5 pips in profit and you close the trade, and then you hit yourself in the head with a hammer 2 days later when you see this thing run down, and then continue this harmonic move back in to right about the 618. And I've got people emailing me trades all the time that go on a Monday, emailing me a trade that says I just made 60 pips on the trade. And then they've taken 2 trades. They show me a little thing. It says plus 60, plus 50. They made 110 pips. It's Monday. As far as I'm concerned, you're done for the week. Especially in a week where there is news coming up. So if you can get out of the week on a Monday for 110 pips, sit on your hands. Just know that you had a winner. You had 2 winners, and you're done for the week. And the very same person will email me and go, yeah, price action, I don't see anything, it looks crappy, and then send me a trade where they lost 40 pips. And I'm just going, what are you doing? Ozzy Yen, this has been kind of a crazy pair lately. Massive sell off here. Again, all happening during London. New structure high created during London on Tuesday. And then we go sideways, and then we have this sell off. But again, you don't have to always take divergence trades. Depending on your system, you got to follow your system, but you want to just track when you see divergence setting up, because this divergence, guys, like right here, we have divergence. Here's your signal candle during the Asian session if you trade it. Nice little scalp. But look at this rally. And I've told you before, when you see this, the market has a tendency to duplicate that. Nothing's perfect, but the market has a tendency. When you see something like this, which direction is the market going to continue? We're only trying to figure out if the market's going up, down, or sideways. So when you see a rally like this, where's the market most likely to go? So unless you have a counter trend divergence trading system, you're a buyer only. Why? Because my trend line is gray. It's going up. It's going up. And then what happens? We get exhausted. We get exhausted. The market moves sideways, and then we roll over. Here we go. Bearish rotation, first strike sell in the Asian session. If you trade the Asian session, there's your trade. We don't take second strike trades with these systems. But if you're a price action trader, you can look at the ABCD completion here. Back into structure. Look at this massive support that we're heading for right now. Pound yen. I just look at this, guys, and I don't trade. I'm a kind of a neat freak. I like things to be neat and clean. This is a pair I'm kind of watching right now. We're moving sideways, a little bit of a rally. We're well oversold. These Swissy pairs have been really, really great. Look at this. Perfect support, beautiful bullish divergence, nice cross, but look at this. Look at these candles. It takes 15 hours for this thing to complete the bullish rotation. But if you got long during New York on your counter trend divergence trade, you have to have the patience. That's another day. But your analysis is correct. Your analysis is correct. You've got to build a belief in your analysis and execute the trade. This has been a good pair. 1 hour chart. Beautiful sell-off here. New structure low. And we look for new structure. We look for X at the new structure. X to A to B, B to C. No advanced pattern formed here. Overbought. Not a very pretty trade. Not saying I would have taken a signal. Again, in the Asian session, I don't trade it. Missed trade. Euro Aussie the past couple days. Look at this. Massive rally. Complete deep retrace. Almost the entire length of that previous rally. But we get hung up here in structure. Right? Look at this consolidation zone. Look at all this structure right here. Short rally. Again during the Asian session, which is, guys, I'll admit, it has been incredibly volatile. Very profitable for those of you that trade it. I don't. Market baseline, not where I like to see it, but if you're like risk, here's a bullish divergence trade. Double bottom. Oops, that's not the right line. Double bottom. Bullish divergence, and we're crossing the market baseline. Yeah. So, but look at this rally that occurred. We totally retested this resistance, and our 618, which would have been my conservative profit target here, right back into this previous resistance. And then look at the 382. I mean, bam, little hang up, and then bam, but we blew right through that. Now we're overbought. But this Euro Aussie and Pound Aussie, always really volatile. This is a very nice market harmonics trade. This is price action trading, guys, 101. So here we have new structure low. Let me get my arrow here. New structure low. Okay. Market baseline, not in the extreme where we like to see it, but again, high probability trade. New structure low. We're near this resistance level. Not perfect, but here we go. A to B, B to C. Okay, look at our retrace here. At the 618. So this is not a strong trend. So what price action trading strategy would you use here to take advantage of this ABCD harmonic move? Do you guys remember that strategy? You know what that's called? That's one of them, Carlos. Very good. You could do an aggressive C, but if you're conservative, you can use a conservative B, and you'd put a trade 1 pip above B, and that trade would be the distance from B to C, in this case 135 pips on a 4-hour chart. And look, we go 150 pips. Yeah, it's a right skew. Right skew. Very good, Agnat. Very good. A right skew means it takes less candles to break structure at B than it does to create B to C. So even though this is a deep retrace, we have a situation where the ABCD harmonic completion is highly likely. Yeah, mental block there. Conservative. Yeah, mental block there, Ken. Conservative C. So why am I bringing this up, especially on this pair? Because not everything is perfect, guys. And I'm going to relate this back to some of the questions you guys have been asking me and overthinking about this trade copier. This is not a perfect world when it comes to trading. We're trying to create an advantage based on our level of knowledge and experience. And if you can look at this and say, not perfect, but some nice divergence forming here, price moving down, waves flat, impulse, retrace. Okay, not a perfect setup, but here's what I have. I'm conservative. I'm protecting my capital. So what am I going to do? I'm going to put a conservative B trade in here. So if the market does a 1, 2, 3 outside return and continues down in this direction, my order's not even filled. But the chances, the probability, the tendency is that with this right skew, the market's going to complete this harmonic move and I'll get wicked in here, bam, and I'll take this conservative trade out the distance from B to C all day long. So when you look at the market, it's kind of like you have to pull out all of your ammunition. But you can't do that until you have the discipline to first use your conditional thought process and apply a system. And that's why I start you guys in these courses with systems. It's creating those habits. It's creating that ROE. Yeah, that was Agnet, right, skew. That was genius. Yeah, Agnet, these guys are saying thanks for bringing that up. They forgot about it. But that's exactly what I'm talking about. Yeah. You have to be able to look at this and go, quickly, is this an opportunity? And even with the knowledge that you have at this particular stage in your trading career, you have to be able to sort. This is not something I recognize. It looks like I missed the move. Potential advanced pattern forming here. I don't really recognize this, but what is this? What is this? Is this an advanced pattern? Well, I'm not an advanced pattern trader. What's going on here? Blah, blah, blah. You know what I mean? Next. And this is what you do when you sit down to trade. Let's take a look at this. Euro GBP. We'll put this here. Hang on just a minute on the daily chart. Oh, okay. So here, this is great. Look. So here we have new structure low. Look at how oversold we are. Here's the euro against the pound. And we've got sore thumb, right? Sore thumb high, sore thumb low. We're at the 618. And what is going to happen here? Are we going to do this? X to A to B, pull our fibs in. If we're at the 618, then our harmonic move is here. Back into structure here, consolidation zone, look left, structure leaves clues. If we go shallow to the 382, then we go up here, a little bit of a consolidation zone right in here. And we could do a 1, 2, 3 outside return to the 618 and then do our ABCD there. But if I had to choose to increase my probability of success in this trade, would I be a buyer or a seller? If I didn't know anything else about price action analysis, would I be a buyer or a seller on this chart? Yeah, you would be a seller. The prevailing trend is down. We've come into this consolidation zone right now. So my thought is you're going to have to pay attention to see what this retrace does over the next few days, to see if we break the 50%, if we break below and close below this 382, this structure right here, and see how far down this goes. But from a counter trend divergence situation, I mean, this is our X. We didn't have any divergence here, but look at this market baseline. This is what I would be looking at in terms of getting long here. I love to see this. I love to see this. Even without divergence, this is great for on a smaller time frame for a short scalp trade off the daily chart. That type of oversold condition. So yeah, if you want to go longer term, so we pulled in our fibs from here and here. Okay. You're just going to have to wait to see where this retrace ends up. If you want to go longer term, you'll pull in your fibs there, structure at the 618, and this is that potential ABCD completion from the 382 retrace right in there. So you've got some confluence happening there. But this is going to take some time to play out, definitely. All right. Are you guys looking at any other pairs in particular? We got the Kiwi Yen moving sideways. We got the Kiwi dollar moving sideways. We had a nice rally at the beginning of the week, and now we're just kind of drifting sideways, waiting for a breakout there. The dollar rallying against this previous sell-off against the CAD during the week. Nothing's just really jumping out at me, guys. We're creating some new structure. We got this Aussie Yen that I've been watching coming right back down into this structure right here. I don't know if we're going to retest this level of support, but we're clearly oversold. So I'm just kind of waiting it out. Not much that I really see. Dollar CAD chart late Friday. Yeah, okay. Here we go. Bullish rotation. Late Friday is a tough time to trade unless you're picking up fades from news, retraces from news. But late Friday, the volume's kind of slow. So I would caution you to be very alert, especially if you're getting in trades after the lunch hour on Friday. That's when happy hour starts. You know, guys are popping drinks at their desks and stuff. And anything can happen, but this GBP CAD was the best setup that I saw later part of the week. Aussie CAD. Again, a very, very deep retrace off of this new structure that was created. So I would be looking for A to B, B to C, C to D, and we'll create some new type of advanced pattern there. We could retest this previous resistance. If you look left, I don't really know, guys. Nothing's really just jumping out at me. Okay, Ken, thanks. I'll see you. Are you guys in any open positions over the weekend that you're freaking out about? Okay, good. That's good news. A lot of you were saying no. What I'd like you guys to do, your action item, I don't know that there's really much more to look at on these particular charts. Let's look at this. Okay, so we made a bullish rotation. Here's a trend line rejection. Let's look at our 1 hour chart. Bearish rotation there. Daily chart. Yeah, we're kind of in no man's land right now. Is just to sit back. Oh, Euro NZD long, open now on daily. Okay. I need you guys to pour your favorite beverage and sit down and look at your charts and just take these lines and start looking for harmonics. A, B, C, D. Start labeling structure. Just kind of zoom out. Zoom out and just look at the flow of price action. Look at where divergence occurs and the market turns. Just get a feel. Now this is going to be, clearly a news anomaly. But just look at the way the market moves and retests and how these indicators uh, display as a result of this price action. But the more you practice that, the easier it's going to be for you to qualify your trades. I took no trades last week, Renee. This was the only setup I saw, and I was busy answering questions for the trade copier this week. I literally was not in the market at all this week. Let's look here at the Euro Kiwi. You're long on the daily. Okay. Bullish divergence. We've got a nice cross here. If you use the TDI, RSI crossing the trade signal line, and our market baseline not all the way down, but in a nice position here. Let's look at the 4-hour. Kind of moving sideways there. Let's look at the 1-hour. Okay. So, A to B, B to C, C to D. We haven't even reached the 382, and we have some major support becoming resistance. Bullish divergence coming off the bottom. On the daily chart. I see nothing wrong with that trade. You've got, I don't know exactly where you entered, but let's assume you entered somewhere in here. There's your risk if you've got stops below structure. About in there probably. And there's your reward if you're going to the 382, which is where I would go for my first profit target. You're going to have some consolidation in here, and then you're coming into this key support level. So there's nothing wrong with that trade if you got the patience to sit on it. You trade it off the pin bar, which is this right here, this hammer. This, yeah. Yeah, there's nothing wrong with that. I wonder. I don't have regular candles on there, but oftentimes, guys, what I'll do too to confirm these patterns is I'll throw regular traditional Japanese candles on here, because I do know sometimes if you use Heikinashi, oftentimes a lot of these distinct candle patterns, especially dojis and stuff, uh, won't pop out as clearly using Heikinashi candles. So I'm not opposed to throwing a template on there for regular candles as well. So yeah, I think that's a good trade. You just have to have the patience to let it. That's about a 1 to 2 risk profile, man. That's nice. Anything else, traders? Okay, well, let me say I appreciate your patience. I want to thank Trey again for all of his support, and please email him directly if you have any questions. We've still got a few more days, and we've still got a few spots left, guys. So if you have some fellow traders you'd like to invite for our trade copier program in the first tranche, if you will, by all means, let them know. We've still got a few of the 60 spots left, so I'd like to get those filled up. And a lot of you have asked me a question that I will answer now. How many traders, or how long will this product be available? I'm capping it off at 100 forever. This is not a charity. We have to charge something, and of course, using these technology partners, they charge money and so on. But this is not going to be open for an infinite amount of traders. It's going to be 100. We're capping it at 100. So if you know anybody that's interested, yeah, I got you covered, Agnat. Don't worry about it. We got you covered. Trey's on it. So it's going to be 100 at the most. But I encourage you to invite any fellow investors to get on board before the second, so that they can get the price discount on the subscription. Okay? So that's going to do it, I guess, for today, traders. If you have no more questions, we'll do our best to see if the market gives us some opportunities next week. But we're going live, guys. We're This is up and running now. So that's what's going to happen. Be patient, be mature, and have realistic expectations. That's all I can say. Thanks again for your time. Yeah, no worries, Carlos. We got you. Those of you guys that are in process, we see you on a list. So you're in. It's all good. You're done. This is just a matter of getting you processed and stuff. And Trey sees all that and he's working on it. So we've got a very comprehensive list of who's involved and what's happening. Okay? We'll try to do another live session in the next couple of weeks, and it will be probably 30 to 45 more days before we do any live sessions for you guys in the trade copier. So that won't be coming very soon, but that'll be here before you know it. Yeah, well, you're welcome, Craig. I appreciate that. Thanks a lot. So we're going to call it a day, guys. I will see you next time, and email me with your questions. And if anything technical, just email Trey directly and CC me. Address everything to him. He's on it, and he'll take care of you guys. Okay? Thanks so much, and have a great weekend, and I will see you next time.